Hello everyone and welcome to Crypto Atlas. This is an update video for AMC, the movie theater stock. If you guys are new to the channel, feel free to hit subscribe. Would love for you guys to be a part of the community. As you can tell by my name, I also talk about cryptocurrency stuff as well, but I do a lot of videos on AMC. I've been doing them on the daily during weekdays. And so yeah, I got a lot of content here to provide for you. Feel free to hit the thumbs up like button as well. It'd be very helpful in the YouTube search algorithm. And if you can, share the video on social media so other people have this and they can give their feedback on it too. Please keep in mind, I'm not a financial advisor. Everything I'm sharing is my own opinion. It's my own research, and I encourage you guys to do your own research as well. The main topic we're going to be talking about is going to be this treasury debt with the debt ceiling. I'm going to give you guys just a couple key points. First off, we'll lead into that, and I'll try and keep this video to be really short and to the point. This is actually my second time recording this video. So AMC is down 4.92% on the daily. Volume is quite low. You can compare that to all the previous days. The average volume is 90.15 million shares. And what we're actually seeing right now today is only 58.97 million. So quite dramatically less. The after hours is nice that it's actually starting to climb up just a little bit here because this key level support line that I drew at $35.91, if we have 3 days mainly, I mean 2 is bad, 3 would be really bad, then that could potentially signify to the institutional investors, the people that have large amounts of shares, they might have a different sentiment than you and me, which is, you know, we're just holding on, we're okay with this. But for them, they might look at it and say, oh, crud, we have to start selling off our shares and having a further drop down. The next major level of major concern would be down at $20.69. And the lower the price goes, the easier it would be for these hedge funds and market makers to be able to cover their short positions because they don't have to pay as much money out of the pocket then, which when they buy back those shares, it would cause the price to start going up again. So regardless, we still have an opportunity to bounce back. But, you know, if they have to pay it off at these higher levels, it's better case scenario for us because the price is more likely to go way, way higher. Adam Aaron, just a real quick little reminder for everybody, August 9th, he mentioned that that will be the quarterly earnings report. You guys want to keep an eye and pay attention to that. As far as the dark pool goes, there's negative 194 million shares. Negative. And the position is negative $7.6 billion. This stuff is ridiculous. Moving on, if you guys actually take a look at the percentage here for the dark pool, it is at 63.9%. So it has dropped down in comparison to previous days, but it's nothing really to get excited about. They're still trading over 6 out of every 10 shares across the dark pool, which is really sketchy and just doesn't seem like a free and fair open market, right? So that is just stupid. The other thing I want to point out too is it's down to 200,000 shares available to borrow. If you guys watched my previous video that I did on AMC, this number was way, way higher. It was like 5,400,000, I think, if I remember correctly. And then the day before that, it was 15,000. So you're talking about millions of shares that just over the course of one day, all of a sudden became available to borrow. And then the next day, oh, they're basically all gone again. Where is that going? Who is it that's borrowing all this stuff and in such large quantities? And how can they afford to even or have the access to be able, the permissions to be able to do something like that? That's just insane. I mean, like, they don't have to pay anything at all? Is it just like they could literally take everything, one individual group, and they're just there and whatever they want to do with it is at their own discretion? Is there no time limit on that? Like, it's just ridiculous what's going on there. Okay, let's go ahead and move on. So the Treasury Department to invoke extraordinary measures as Congress misses the debt ceiling deadline. The Treasury Department will begin conducting emergency cash conservation steps. Economists say those so-called extraordinary measures will allow Treasury to pay off the government's bills without issuing new debt for up to 3 months. That should buy Congress enough time to raise or suspend the debt ceiling. The alternative would be a never-before-seen default on the United States debt. So this is some stuff that's pretty serious. It is pretty concerning. The new debt limit will include Washington's additional borrowing since summer of 2019. The Congressional Budget Office estimated in July that the new cap will likely come in just north of $28.5 trillion. I will be unable to fully invest a portion of the Civil Service Retirement and Disability Fund, or the CSRDF, not immediately required to pay beneficiaries, and that a debt issuance suspension period will begin on Monday, August 2nd, 2021, which is today, as the time of me making this video, and last through Thursday, September 30th, 2021, Yellen told the House Speaker. So that's 2 months time period. We're going to talk more about this debt issuance suspension period because I think it's very pertinent in relationship to what could be happening with the stock market and especially with AMC stock. A further note is up here. The total market cap being, the total new cap for the budget for the debt limit, will be coming in around $28.5 trillion. Increasing that shows a devaluation in the value of, I'm speaking redundant. Anyways, words. Let me say that again. So 28.5 trillion for the debt limit. If that's increasing, it shows a devaluing of the United States dollar, which means other people are going to be looking to safe haven assets like gold and silver or cryptocurrencies. And as the value of the dollar drops, we see market volatility and can affect things like the stock market, just as an example. And if that affects the stock market, and especially as they're talking about, hey, we don't want new debt, we're trying to pay off the debts of things, we're trying to provide cash, that provisional form of cash sounds very similar. Let me know what you guys think, but it sounds very similar to that NSDC rule that's being proposed to help provide cash to the hedge funds and to the market makers so they don't have to sell their stocks. They're essentially providing those as collateral over, and then they're using the cash to be able to pay off the debts that they owe for these margin positions. Because we don't want the stock market to crash either. That affects the whole U.S. economy as a whole, as well in a lot of different retrospects, trust validity between national trading, things like that, okay? So taking a look at that, I think that this is really, really important that we keep an eye on how this continues to move forward. Now, moving on with what the topic was for the debt issuance suspension period, the main takeaway for this, I'm actually going to focus on this part right here, is Treasury can declare a debt issuance suspension period during which it can take extraordinary measures to continue meeting federal obligations provided that it does not involve the issue of new debt. Provided that it does not involve the issue of new debt. These people that are on margin positions, they kick the can down the road. So how can they get new debt at this kind of a point in time? You see what I'm saying? So that means that whatever their deadline is, I think it's more likely than not that they're going to say like, hey, we're not allowing you to build new debt. You need to finish paying off what you owe. And we're margin calling you now. And we're providing this other avenue so that like you're not completely screwed and we're not taking down the stock market. These measures are taken to avoid, as far as resources permit, a partial government shutdown or a default on the debt. These methods have been used on several previous occasions in which federal debt neared its statutory limit. And continuing on with this, an old article, this was written back on August 2nd of 2013. Check this out. They said a showdown over the debt limit in 2011 sparked wild stock market swings and helped strip the United States of its top-tier AAA credit rating. The previous debt issuance suspension period ended this Friday, the last day before Congress begins a month-long recess. Well, guess what? We're now seeing Congress taking a month-long recess. So that is occurring. It's seeming like as if it's history is now repeating itself. And if you guys take a look at this just margin statistics, we're at the highest that we've been in these last 5 years. This is absolutely insane. I can't go back 10 years, apparently. I was going to look at it a little bit further, but it's really, really high. Debt needs to be paid off. You can't just keep building up debt and never expect anyone to come forward and say, hey, you need to pay this off, right? So it's getting absolutely insane. So investors who use margin debt pledge their securities in exchange for loans from brokers to buy more securities or sell short of stock, which what we're seeing a lot of is the shorting of stocks. Regulation T says investors can only take on margin debt of 50% of their account balance, though the typical margin requirements is 25%. So this is crazy because we're seeing some of these numbers being suggested with AMC with the shorting positions that, well, with right now us being at the $35 range, it was estimated that the entry point was around $10 to $12. So this is about 300% above. Why hasn't there been executions on it? Well, the large belief is that it would literally crash the whole stock market as they would have to sell off all their other assets in order to have the funds available to pay off that debt. And so new rules are being set up. And this stuff is being largely confirmed too because you look at the large quantity of records of the failure to delivers, which means that you're contractually obligated to have to pay off your debt by a certain time. And when you don't pay off that debt, you failed to deliver. You broke your contract, and that's a violation of things. So the margin calls aren't being pulled through. They are right around the corner as far as we can tell, but it's a patience game. We have to wait for the people that are in the positions that can actually do those enforcements to actually do those enforcements. All we have to do is hold. That's all we have to do, guys. They still have to pay off their debt. So let's see how this continues to move forward. You guys let me know how you feel about everything in the comments down below. I'm personally still very bullish. Not a financial advisor. If you're new to the channel, feel free to hit subscribe, hit the thumbs up like button, share the video, and I will see you guys in the next episode.